Check, 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 check. Can refresh a couple screens here to make sure we're working okay. Testing, testing. Let's see how this goes. All right, I'm gonna keep that on silent here. Hello, everybody. Joshua Meeks here with the PNW team at Keller Williams, just working on getting this set up to give you a market update. Perfect. All right, we're just logging in, making sure I've got my screen pulled up. There we go. All right, give me a few more seconds to get this all set up. I know there's a little bit of a delay, so bear with me on that. As questions come up, I want to make sure we are answering them for you. And in order to do that, I have to make sure a couple screens are up. All right, everybody, thanks for checking in. Let me know if you have any problems hearing me or any questions as we go over this. I'm going to step over to this side. I've got my iPad Air playing some stats here. For those of you who I've had the pleasure of sitting down and getting to know and going through either a buyer or a seller consult, what you know about me is that oftentimes people will sit down across the table, either at a listing presentation or a buyer consultation. They'll say, hey, is now a good time to buy, to sell, to refinance, to invest? And I rarely have a brief answer on that question. And the reason is because I think it's important not just that people trust and have confidence in the trust and the relationship and the knowledge that we have in the real estate industry, but on the PNW team, our hope is that each of you see yourself as a real estate investor, that every person sees themselves as somebody who understands real estate, understands the dynamics of real estate, understands a marginal amount at least of economics, of housing, of unemployment, of microeconomics and macroeconomics. And the reality is some people I sit down with and they have a very simple question: is now a good time to buy or sell? And answer that question with a long answer. And some people would just prefer to say, hey man, I don't care or know about any of that stuff, but I trust in your wisdom and the real estate industry. So yes or no. And usually the answer is yes. And almost always the answer is yes, if it makes sense for your real estate goals. And that's always the question that a real estate agent's going to ask you. Is when you say, is it a good time to buy or sell? We're going to ask, what are your real estate goals? And that might help figure out or establish what that answer is. So if you all have any questions at all as you are watching this video, let me know. But I'm just going to jump into a little bit of the questions that have been coming up consistently over the last few weeks and over the last few months even. The first question is, make sure something hasn't come up already. No, it's somebody else. The first question is, how is coronavirus impacting the real estate market? And for the sake of this, I haven't heard it said before, but we'll just call it coronomics. Okay, so this is like corona economics, which is different than normal economics in the sense that all these questions that we have right now about housing and economics and impact, it's largely based off of how is this pandemic impacting the real estate economy. Let me give you a quick intro to that by saying some people have a concern about unemployment based off of this current pandemic, based off of this current crisis. Keep these stats in mind, and we'll break into them a little bit later. Right now, a lot of real estate agents that are active in the industry, that are full-time agents, that are actually like having a good pulse on what's happening in the industry, be able to tell you for sure that most homes have around 7 to 8 buyers at least for each listing that's coming on the market. That means there is massive demand. A lot of these homes have 5, 6, 7, 10 times the amount of demand for the homes, especially if you're looking at the median price range of around $420,000 and less. Then we're seeing housing availability. The biggest issue or concern that we've had over the last 4 or 5 years is a shortage of inventory, and that shortage of inventory, on any economic scale, shortage of inventory increases demand, increase of demand increases prices. That's usually the way that economic scale works. So let's say 10% of the people in the Pacific Northwest, heck, let's say 25% of people in the Pacific Northwest lose their jobs. Now, this is what we call an isolated variable. Say it doesn't impact emotions or perspective of the economy nationally or locally. Let's just say 25% of the people in our economy lose their jobs. Sounds like a massive deal. Sounds like it could be an absolute economic concern. And if you're one of the families that's being impacted by unemployment, it's a massive concern. It's a huge deal. But let's look at that and compare it to the actual housing economy that we're in right now. If you have roughly 8 buyers for every home or sale that's on the market, 25% of these people, 1 out of 4 people, or 2 out of 8 people lose their job and hypothetically no longer qualify for financing on this home. What that means is we still have roughly 6 buyers per home if it's an isolated variable. That's still a significant amount of demand. So, is Corona impacting the economy? Yes, it is. Is it impacting families personally, businesses, local industries? Absolutely. The way in which it's impacting the real estate economy specifically is significantly different. Keep in mind, a lot of us who have experienced the great housing crisis or the great bubble of 2007, 2008, we've lived through that. And it's easy for us to look back and assume that this means that. But if you look back in history, housing prices actually stabilized or continued to grow straight through a lot of the previous recessions that we've had in the past over the last 50, 60, 70, 80 years. So that's a huge factor that makes this significantly different. Now, again, if you're talking to any real estate industry that's active in this market on the way that it's impacting the housing economy, what difference does it make? Well, we have to wear masks. We do have to wear gloves. As of today, it's the 7th. That means that hypothetically, if anybody shows up to a house without a mask on or has an appointment without a mask on, we're supposed to refuse the service. Now, some people are doing that, some not, but whether or not that's the case, putting on a mask, putting on gloves, it's not necessarily impacting the real estate economy. And as I'm going through this, if you guys have questions, feel free to jump in anytime at all. And I'll be happy to answer those as I see them come up with all 3 of these screens open. So us having to put on a mask and gloves, I don't really personally feel like it's impacting our business significantly. But certainly, if we have a buyer who is looking for a house and now they're unemployed, that sucks for them, sucks for our family, sucks for that relationship. But is it impacting sellers of the housing economy? Not really, not much at all. Now, I've also think it's important to delineate between enforced economic balance and a normal economic balance. And what I mean by that is if you look back into unemployment rates, 2008, 2009, 2010, I-5 was roughly, fairly open. The traffic was clear because a lot of people weren't working, and they weren't working because the natural progression of the economics, the industry had forced those people out of jobs. This is a lot different than somebody hypothetically turning the switch off and saying, hey, the economy's there, the demand is there, the supply is there, all of the economic factors are there. But another way to think of it is whether it's the governor or the state or the nation, we've had to flip the switch off. Whether or not you think that's necessary, the switch has been flipped off. That switch is closing down businesses, restricting the amount of people that are coming through those businesses, restricting employment opportunities for people in businesses. This is not a natural progression of economics. Now, it can definitely be a natural progression of economics if people are forced out of a job, if it increases foreclosure or mortgage default rates, etc. Another one of the questions that's come up on that note is that people have asked, and agents feel free to jump in if agents, lenders, title people, anybody else, as long as you're not just randomly soliciting your business, feel free to jump in on any feedback that you have too. Anyhow, that being said, I had a good friend of mine and a client recently sent me a link and said, hey, this thing is that that housing default rates are higher than they are right now. Well, as a matter of fact, they are probably as high as they've been since around 2011. Now, what that means for us is because a lot of this is being rewarded in this market, whether we like it or agree with it or not, that if you're defaulting, if we make it okay to default, if we give the thumbs up on the default, more people are going to be defaulting. If we say, hey, it's okay, either as a tenant or a mortgage owner during this time to default because it's going to be forgiven somehow, well, of course, there's going to be an increase of default. But here's what I want you guys to think about. I want to show you something real quick on this. This is incredibly helpful to look at. Now, This only goes to the second quarter of 2019. And keep in mind, a lot of the real estate market has been increasing over this time. This blue line is the amount of home equity debt that people have had. This reddish orange kind of PNW orange line is the amount of equity that people have had. So blue is debt, that's bad. Red is equity, that's good. If you look at the range between around 2007 to 2010, this is what you call a bubble. This is what we call a concern. When outstanding debt is huge and the amount of equity people have is very low. And here's a huge difference that we have today, just to kind of give you a quick context. We're live up to date. As of around 2014, a little while after I actually got into the real estate industry and started representing people actively, in addition to myself, we crossed paths here, which is huge. That's amazing. So this is equity now. This is where we're looking at in equity, and this is debt. We haven't been in that strong of a position for a long, long time where, oh, that's somebody just texted me. I'm going to ignore that real quick. So we haven't been in that position for a long, long time when people have had that much equity and that little of debt. A matter of fact, a ton of homes are currently owed free and clear. So when you look at default rate, if homes are defaulting in 2011, that's a huge deal because they don't even have the equity to come up with that mortgage payment or to sell their house. If people are defaulting right now, well, they're still sitting on a huge chunk of equity that in 2011 they weren't sitting on. So want to give you guys that context and a couple more. Okay, Fruitland family, who is texting quite a ton right now. I'm going to try to ignore that. This is another chart I wanted to show to you all that's incredibly helpful for me to explain the difference between right now in the real estate market and a while back in the real estate market. Very, very common question: is now a good time to buy or sell? Followed up with the question of, are we in a bubble and is that a concern? So I'm going to backtrack real quick. Sure, I haven't had any new comments or questions come up. Okay, cool. So here's a huge difference, and I apologize for any delay of internet data. Sometimes it's not great here, so it might get a little fuzzy at times. An actual bubble is when, I'm trying to ignore this Fruitland family, amazing community, but text a lot. So this bubble right here is what we call the 2007, 2008 housing crisis. This is around the time, okay, hold on. I need to silence this conversation and then I will get back to it. All right, hide alerts. Hopefully you can't hear that digging 18 times on your end. When we look at what was taking place in the housing economy back in 2008, people didn't have equity, or the equity they had, they were way over maximizing it, right? The classic pulling out equity and buying an Escalade. People are a lot wiser, a lot smarter. Lending regulations are a lot tighter now. This is inventory in that area. And when we talk about a bubble popping today, in 2008, 2007, there was a large bubble. You can see, this is not a huge screen, but you can see it's a large bubble. When inventory is high and overnight demand decrease and default rate increases, this is a bubble and it pops. So think of inventory as that bubble specifically. Again, if you look at normal economics, typically when supply is there and supply is high, then demand is decreased. And when demand is decreased, then prices decrease. When supply is low, demand increases. And when demand increases, prices increase. So a lot of people are saying, hey, default rates, unemployment rates, coronavirus, life pandemic. Here is the inventory we had, and here is the inventory we currently have. This is a bubble that popped in 2007 to 2008. If this bubble pops, it's a pretty small bubble. So inventory equals bubble, bubble equals inventory. Again, this is an isolated variable. It's always the exact case. But when we look at supply and demand in economics, that is largely where that's brought up. Now, I want to show you one more thing. This is going to be what's happening in the economy right now. I'm just holding my iPad as an AirPlay. So this is, just to give you some context, this is what's taken place over the last 15 years on this chart. This is what's taken place on the last year on this chart. What you'll notice is if we zoom in on this, over the last 15 years, These dark green bars are homes that have recently sold. This red line is homes that are completely going under contract. And this big old bubble that we saw back in 2007, 2008 area, this is the amount of inventory that there's no demand for. This is builders overbuilding. This is people putting homes on the market that people don't have the equity or the credit to purchase. That's what we call a bubble. And this huge yield is what we would call the difference between what's available and what's actually needed is a yield that creates that bubble. Now, if you cruise way, 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 way down here, this tiny little bubble, right? It's like looking at the Earth next to like a tiny star. What you'll see is this red line has come closer and closer and closer to what the actual supply and demand is because lenders, buyers, sellers, consumers have gotten smarter. So congratulations on that. When you look at the next chart, here's where we are. If you're a buyer in this market and you're wondering why it's so difficult right now to get into a home, why it's so competitive, it's because we used to have a lot of inventory. If there's 10 sellers for every buyer, it becomes a buyer's market. That's fantastic. If there's 10 buyers for every seller, it's a seller's market. It's great for sellers, not as exciting for buyers, other than phenomenal interest rates during this time. This is last month specifically, where we had 9,700 homes go under contract and right around 8,000 available. And this is happening month after month after month. A couple of good reasons. During coronavirus, people don't want to invite a ton of strangers in their house, right? This is what we call, forced economics based off of a pandemic. But this inventory shortage is a huge difference. And while there's an inventory shortage, there is more equity than we've had in a long, long time. So significantly more equity than we have had in a long time, a lot less inventory than we've had in a long time, and a massive, massive and consistently for homes than we've seen in a long time. Last question that comes up, super important, comes up all the time, is refinancing. Is now a good time to refinance? Y'all, I just refinanced, and to be honest, to be transparent, I purchased my home about a year ago, and I used some of my commission to buy down that rate at that time. Seemed like a good time and make the best decision for what you can during that time, and now rates are even lower. So we refinanced, bought it down even a little bit more. Now our refinance rate was under 3%. Standard refinance rates are like low to mid threes right now. Purchase rates a lot of times are under 3. If you're not following the PNW team on Instagram or Facebook and getting those regular updates of the monthly market updates, or just that weekly snapshot of what's taking place in the market, what you'll see consistently taking place is that there's massive demand, very few homes, and it's been the same story. Interest rates low, and that's helping to sustain that difference. I'll always add the caveat that if we force a market shift, right? If we force unemployment, if we tell people they can't serve people, if we tell people they can't close their business doors, well, eventually, when they come back around, the demand might not be there like it was before, because now that money, it's constrained the flow or liquidity of United States capital. That's just bound to happen. But if we are able to respectfully go from phase 1, 2, 3, 4 as a state or as a nation, it definitely helps that become a lot easier. And we're very grateful that in our state, we have the ability to continue to show homes with guidelines and parameters that have made that all make sense. So if you're able to save around 1% on your rate by refinancing, it's probably a great idea. If you're hoping to move sometime in the next 2 to 3 years, it's probably not a great idea, because by the time you pay fees for refinancing, then you're going to be hitting a break even probably in 2, 3, 4 years. And if you're selling by that time, it wouldn't have made a huge difference unless you're just trying to miss a couple payments. So there could be huge benefits. I had a good friend of mine who recently refinanced and saved $600 a month. That is food in the cupboards. That is a huge difference for affordability for housing, and for some people, even gives them the ability to rent that home out and to buy another home. So that being said, we talked about a lot. We talked about coronomics or corona economics. We talked about forced versus a general market and the difference between that, refinancing versus buying and selling. Just to kind of recap on that, refinancing is a great idea. Another good idea is pulling or selling that home, leveraging that money to put 20% down on your next investment so you don't have to have private mortgage insurance. And finally, default rates and bubbles. So listen, if you guys ever have questions anytime, I want you to know that you can reach out to us without feeling like we're going to have commission breath, as they say, and that, or that we're going to be like, oh no, you should definitely buy or sell right now. The question we always want to ask is what's currently taking place in your own economy, in your own family, with your own job situation, with your own housing, and to see if it is the best thing for you to buy or sell or refinance or invest during this time. So we hope that this is beneficial for you. We truly do want you all, in addition to the trust that you place with the PNW team, to feel like you are educated investors, homeowners, sellers, and even economists. If you ever have any questions on making that happen, feel free to reach out anytime to the PNW team. Love y'all. Thanks for watching, and we'll talk to you soon.